Most beginners don't lose money in the stock market because the market is bad. They lose money because of mistakes, simple, avoidable mistakes. If you are new to the stock market, this video can save you years of frustration and losses. In this video, I will explain the most common mistakes beginners make, why these mistakes happen, and most importantly, how to avoid them. If you are serious about learning the stock market, watch this video till the end. Mistake number 1. Overtrading. What is overtrading? Overtrading means buying and selling too frequently, trading every small price movement, feeling that I must trade every day. Many beginners believe more trades mean more profit. This is completely wrong. Why beginners do this? They do this due to the following reasons. First, due to excitement. When beginners enter the stock market, everything feels new and exciting. Seeing prices move up and down feels like a game. This excitement pushes beginners to trade again and again, even when there is no good reason to trade. Because of excitement, beginners forget that the stock market is a serious financial activity, not entertainment. The second reason is fear of missing out. Fear of missing out means the fear that others are making money while you are not. When beginners see a stock going up fast, they feel that if they don't buy now, they will miss the opportunity. Because of this fear, beginners enter trades late, without proper thinking, and often at the worst price. The third reason is watching others trade frequently. Beginners often watch experienced traders on YouTube or social media who trade many times a day. They think this is the correct way to trade, but they don't realize that professionals have experience, discipline, and risk control. Beginners try to copy the action without having the same knowledge, which leads to losses. The fourth reason is that they believe trading is a daily job. Many beginners think that if they do not trade every day, they are doing something wrong. They believe trading means sitting in front of the screen all day and clicking buy and sell. In reality, professional traders wait patiently and trade only when good opportunities appear. Now, why overtrading is dangerous? First, more brokerage and fees. Second, emotional exhaustion. Third, poor decision-making. And fourth, losses increase silently. Now, what is the solution to avoid overtrading? First, trade less but trade better. Second, focus on quality setups, not quantity. Third, accept that not trading is also a decision. Mistake number 2, chasing hype and tips. Why beginners do this? First, fear of quick profits. Beginners want fast results. When they hear stories of people making money quickly, they believe the stock market is an easy way to earn fast income. This mindset pushes them to chase hot stocks that are trending on social media without understanding the business behind the stock. They enter after price has already moved a lot. Big players exit while beginners enter. Second, lack of confidence in their own understanding. Since beginners are still learning, they don't trust their own knowledge, so instead of thinking independently, they act on WhatsApp, Telegram, or friend tips. This dependency makes them vulnerable to bad advice and wrong timing. Third, emotional excitement. Social media creates excitement by showing only profits, not losses. Beginners feel emotional pressure to participate. This emotional excitement replaces logic and discipline, leading to poor decisions. Why beginners fall to chasing hype and tips? Because of fear of missing quick profits, lack of confidence in their own understanding, and emotional excitement. Solution to mistake 2, never buy or sell just because everyone is buying or selling it. Ask one simple question. Do I understand why I am buying or selling this? If the answer is no, don't trade. Mistake number 3, ignoring risk management. Most beginners invest their entire capital in one trade, don't care about stop loss, and think it will come back. This happens due to overconfidence, greed, and emotional attachment to a stock. After a few successful trades, beginners start believing they understand the market completely. This overconfidence makes them take bigger risks than they should. They forget that the market can change suddenly. Similarly, greed makes beginners want more profit from every trade. They increase position size or avoid stop loss because they want maximum gains. Greed often turns small profits into big losses. Likewise, beginners sometimes fall in love with a stock. They ignore negative signals and refuse to accept losses. This emotional attachment prevents logical decision-making. One bad trade can wipe out months of profits. Solution to mistake number 3, never risk more than a small portion of your capital. Accept losses as part of the game and protect capital first. Profits come later. Mistake number 4, emotional buying and selling. Common emotional actions are buying because price is rising fast, that is your greed, selling because price falls slightly, that is your fear, and revenge trading after a loss. Do you know why beginners struggle emotionally? Because they have no trading plan, have unrealistic expectations, and watching price every second. Without a clear trading plan, beginners react to every price movement. They buy and sell based on emotions instead of logic. Similarly, beginners expect consistent profits very quickly. When reality doesn't match expectations, frustration and emotional decisions increase. Likewise, constantly watching price movements increases stress and fear. Small fluctuations feel like big problems, leading to panic decisions. Solution to mistake number 4, always have a reason before entering a trade. Accept that losses are normal. Reduce screen time and control emotions, not the market. Mistake number 5, no patience and no plan. Beginners think, why am I not rich yet? Others are making money faster. Beginners compare their progress with others. This comparison creates pressure and impatience. When beginners don't see immediate results, they change strategies quickly, jumping from one strategy to another every week. This jumping prevents learning and consistency. In reality, the stock market is not a get-rich-quick scheme. Learning takes time, and consistency beats speed. Solution to mistake number 5, focus on learning, not earning initially. Follow one approach consistently. Give yourself time to grow. Mistake number 6, skipping basics and running to indicators. This happens when beginners start using indicators without understanding price, copying other strategies blindly that lead to increased confusion instead of clarity. Solution to mistake number 6, learn how the market works first, understand price behavior, and your indicators should support your decisions, not replace thinking. Let's quickly summarize. Trade less, not more. Avoid hype and tips. Manage risk carefully. Control emotions. Be patient. Build strong basics first. If you avoid these mistakes, you are already ahead of most beginners. If you found this video useful, like the video, subscribe to the channel, and watch the previous videos in this beginner series. In the next videos, we will slowly move toward understanding market behavior and later practical tools and indicators.